Good day everyone, I'm Eris Faith and this is my video presentation that explains the accounting cycle. So what is accounting cycle? The accounting cycle is a multi-step process used by businesses to create an accurate record of their financial position as well as the summarize of their financial statements. So, the accounting cycle is a basic 8-step process of completing a company's bookkeeping task. It provides a clear guide for the recording, analysis, and final reporting of a business financial activities. And in this figure, it shows the 8 steps in the accounting cycle. First step of the accounting cycle is identifying and analyzing transaction. An accountant collects information about the transaction and analyze the document. Not all the business activities are recorded in the financial statement. In this step, you have to analyze if the transaction is financial or non-financial. What are the difference between the financial and non-financial? So, there is a financial is mo ni siya ang mga transaction na pwede ma-quantify ang value. And example ani is ang payment of utilities, borrowing monies. So non-financial naman is mo ni siya ang kabaliktaran, of course, kabaliktaran sa financial. So mo ni ang dili masukat na value. Example ani is ang hiring employees and the orientations. So sa kaninga step, ang financial transaction lang ang pwede nimo na i-record. The second step of the accounting cycle is record journal entries. Recording means to record all the business transactions according to its type of account. All the transactions which are financial with supporting source document should be recorded in a journal. So, there is a journal, gina-record tanan ng mga transactions na nahitabo sulod sa mga business every day. Next is post to general ledger. A general ledger is a set of numbered accounts a business used to keep track of its financial transactions and to prepare financial reports. So once a transaction is recorded as a journal entry, it should post to an account in a general ledger. So all the transactions should be posted on a ledger account. Ang ledger is ginatawag sad siya na Book of Final Entry. Kay dari ang nato gina-classify ang tanan ng mga transactions na nahitabo. Next is an adjusted trial balance. It is prepared by compiling a list of all general ledger account balances as of a certain date. So, a trial balance tells the companies its unadjusted balances in each account. It is a bookkeeping worksheet in which the balance of all the ledgers are compiled into debit and credit account column totals that are equal. So, sa diri nga step, mahibal-an na nato kung imuhang gibuhat nga trial balance is balance ba siya or not. And ma-verify sa dimo diri kung balance ba ang imuhang credit and debit balances sa imuhang ledger accounts. Next is worksheet. It is a spreadsheet tool that records all the accounting information and it is used to prepare the company's financial statements at the end of the accounting cycle. So, by aligning up debits and credits from numerous accounts in a single spreadsheet, in this stage, it identifies any error or abnormalities that may have happened up until this point. If the numbers do not balance, a bookkeeper or accountant will need to go over the transaction data in the journal and make any necessary adjustments. The next step is the adjustment entry. Adjusting journal entries are recorded in a company's general ledger at the end of the accounting period to record any unrecognized income or expenses for the period. These entries are necessary because certain transactions or events may not be recorded or recognized in the general ledger during the regular course of business. Adjusting entries are typically made at the end of an accounting period before the preparation of financial statement. The seventh step of the accounting cycle is the financial statement. The financial statement is the process of compiling accounting information into a standardized set of financials. So the financial statements can be generated after adjustments have been made and account balances have been adjusted. So the financial statement are accounting reports that summarize a company's operation and results over a specific time period, such as a monthly or a quarterly. Balance sheet, income statement, cash flow statement can be prepared using the correct balances. The last step of the accounting cycle is the closing entry. It is an important step in the accounting cycle that occurs at the end of the reporting period, typically at the end of the month, quarter, or a year. Its purpose is to reset the temporary accounts and transfer their balances to the permanent accounts before the start of a new accounting period. Temporary accounts includes revenue, expense, and dividend accounts, while the permanent accounts consist of asset, liability, and equities account. By completing the closing entry process, the temporary accounts are zeroed out, preparing them for the next accounting period. The closing entry ensures the accuracy of the financial statement and provides a clean and a fresh starting for recording transaction in the next period.